So to continue with the discussion last time, I will now go ahead and talk about balance sheet, including the notes. And in the previous video, I already talked about what notes are for, their use, etc. And this time, I will also do the same with the balance sheet or the statement of financial position. Some of you may be wondering, how about statement of changes in equity? Don't we prepare notes for that one? Answer is, we don't, because it is already a note by itself and it is computing for the equity. Anyway, let's start so I can end this quick. And by the way, I intend to just discuss current assets this time so that the video will not be long, because last time I had difficulty uploading because I need to sync the video, I need to sync the recording and everything. So my upload for balance sheet will be in two parts. One is for current assets, another is for the rest. By the way, I have a friend here, Tong Unggoy, to motivate you. Hello. So let's start. Heading. Write the company name. Let's say the name of the company is ABC Trading, so we'll write ABC Trading. After that, write the name of the statement that you are preparing, balance sheet or statement of financial position. After that, write the date. This will not be for the year ended because what you have in your balance sheet is cumulative, meaning from the very first day that you started up until today. So instead of using for the year ended, you will use as of. So as of December 31, say this year, 2020. So that's your heading. And then of course, your balance sheet will be following the accounting equation format. So we'll do it downwards, starting with assets. We'll start first with your current assets. So the very first note that you will prepare under current asset is what we call cash and cash equivalents. Cash and cash equivalents. Assuming that you already have 7 notes in your income statement and you will be continuing in your balance sheet. So this is note 8 already. But that is assuming you have 7. If you have 6, this is note 7. If you have like 5 notes in your income statement, this will be note 6. So ito, assuming you have 7 notes in your income statement, so this is note 8. Then for the balance, you write it beside. So now how do we prepare notes for cash and cash equivalents? I will just write CCE. This is continuation of the notes. You have your title for the notes. Notes to FS. And what do we include under CCE? Anything that has to do with cash. For example, cash in bank. Another is cash on hand. And then you can include petty cash fund. Think of this as the money set aside by the company for small expenses, because companies don't want to be issuing checks to pay the small expenses. So that's for the petty cash fund. So that's your CCE, cash and cash equivalents. Get the total. And again, notes will give you the solutions, and your answers will be in your statements per se. In this case, balance sheet. So that's one, cash and cash equivalents. And then we have another, but this one does not come with notes. It's called trading securities. It comes with different names. It's also called marketable securities. It's also called short-term investment. You just need to take note of those. So that's another current asset. And another is, I believe this note title is one with the most account titles under it, and it's called trade and other receivables. Trade and other receivables. So that's note 9. What we will include here are your future collection, maybe from your customers or your employees or your borrowers. Let's prepare first note 9, trade and other receivables. So what you will include here are account titles with receivables in it. You cannot just total. You need to write them down. Like accounts receivable, then notes receivable, interest receivable. Then you have other things with receivable in it. You will write it one by one. You cannot lump them in just one line. So again, anything with receivable. For example, accounts receivable, that's future collection from customers. Notes receivable, that's also future collection, but it comes with a paper. And then interest receivable, that's future collection from your borrowers, and then other things. And then also include here your allowance for doubtful accounts. This account title is deducted from your accounts receivable. So right after writing accounts receivable, you will write allowance for doubtful accounts, and you will deduct it from the accounts receivable. Okay, so this is minus, this is a decrease, and this is the very first account title that we will deduct in our notes, because normally we just add them, right? So this is the very first where you need to deduct something when you are preparing the notes, allowance for doubtful accounts. And this was discussed in the adjusting entries, right? When we are preparing our adjusting entry for doubtful accounts. And also include here your advances to employees. These are future collection from your employees because they made a bale, so you shell out money and then you are expecting to be collecting from these employees. Okay, so that's advances to employees. And then we can also include accrued income. Another name for this one is accrued revenue. Accrued income or accrued revenue, this is a current asset recognized for what you earned but was not able to collect. So it's a future collection. So we get the total, trade and other receivables, total, and then that's trade and other receivables. And then we have inventory. Luckily, this one does not come with notes. Okay, just write inventory. For the inventory, these are items that you purchase and then you intend to resell. Next, we have, and this is the last, we have prepaid expenses. Prepaid expenses, other name for this one is prepaid assets, and we have a note for this one. So we're done with note 9, so this is note 10. So let's compute. So for note 10, we have prepaid expenses. I'll just write PE. And then for this one, look for an account title with prepaid in it. And by the way, what's prepaid? What's the difference between prepaid and postpaid? Prepaid implies that you will pay first before you use, while postpaid, you will use first before you pay. If you have a, what do you call this, plan, normally that's postpaid. You will use first and then they will charge you. So for prepaid, it's pay first before use. And it's always prepaid for accounting. Never a case will you be seeing an account title with postpaid in it. So that's prepaid. Anything with prepaid, for example, prepaid insurance, prepaid advertising, prepaid subscription. So they are advance payment for something that you will use in the future. And once you use them, you will charge to expense. So following the expense recognition concept, again, you don't total anything with prepaid. You need to write them separately, one by one. Because what's the point of preparing a note if you will just add everything, okay? Of course, they are different, so you need to write them one by one. And then also include supplies. Sometimes in problems, you will also be seeing account titles with unused. Although this is very rare, sometimes they are using account titles with unused. Like unused supplies, unused insurance, unused subscription. So it's the same thing with prepaid. You already paid for something and then you are still not using them. They will still be part of your assets. But again, once you use them, it will be charged to expenses. So anything with prepaid, anything with unused, and then of course your supplies will fall under prepaid assets or prepaid expenses. Okay, so write the amount here, and assuming that this is all, so you just go ahead and write the total here with a peso sign. And that's your current assets. So for now, I will stop with current assets. In the next video, I will be doing non-current assets, the liabilities, and then plug in our answers from your statement of equity, and we're done with the balance sheet. So maybe tomorrow I'll upload the next part, like non-current asset and liabilities. And then after that, we're done with balance sheet. So maybe I'll start with the exercise already. So that's it, no? I will be seeing you in the next.